background.
I'm turning that off right now.
Nah, don't worry about it. It'll be cool if you start getting, live questions in your email box. Like, hey, Michael, I need you to help me now. All right. Well, hey, welcome everyone to this Friday's Franchise Coffee Chat. We got Lauren Dodson, my co-host, and also Michael Iannuzzi, CPA, CFE from Citrin Cooperman. He is the co-practice franchise lead there. And we're so excited to have you on. We understand that tax may be boring at times, but today it's not going to be like that for the next.
Correct.
The reason why we have Franchise Coffee Chat is so that we can really help out the franchise community, provide trends and insights from thought leaders and business advisors within the franchise community. But I'm going to turn it over to Lauren for her introduction, and then we'll get going.
Lauren, I think you're on mute.
I can't hear you, Lauren. It's okay. I'll go real quick. Or keep testing, okay? So I'm William Chiem. I'm from Los Angeles, California, and I work for TriNet. TriNet's a strategic outsourced HR firm helping small to medium-sized businesses. About 18 months ago, Lauren and I spearheaded the national franchise practice at TriNet, and we worked with cross-functional internal teams. You're talking about underwriting, service, technology, VP of product, and implementation. And we found that franchises and franchise systems really found that TriNet solution really worked out for them to standardize and create uniformity across all entities, concepts, and brands. So, with that, I'm gonna turn it over to Lauren. Lauren, are you back on?
I don't know. Can you hear me?
Yes.
You can.
Yes.
Oh, I don't know what happened. Okay. I'm not the best at multitasking. But what I was trying to say is I don't think taxes are boring because there is like that one quote that says there's only two things in life that are guaranteed. One is death. I don't want that one. So I'll take the taxes, I guess.
Right.
So you know what? They're not boring. So for those of you who don't know me, like Will said, William and I started the franchise practice here at TriNet about 18 months ago, built this from scratch as a way of really supporting the franchise community and building out an actual service within TriNet for franchisees specifically. I've been in the industry for almost 17 years and have done HR myself. So the value I like to bring is a little bit of wit and insight when it comes to that and any guidance I can give from an HR perspective. So excited though to spend the time with Michael and learn more about what franchisees and franchisors need to know when it comes to taxes.
All right, Michael, we're on you now. Tell us a little bit about you, and also love to learn how you got into the franchise practice at Citrin Cooperman.
Sure. Well, again, guys, thank you so much, William and Lauren, for allowing me to participate. I think this is a fantastic platform that you guys put together, and I can certainly see the hard work and dedication that went into it. All your social media posts, the way this is very professionally done. So congratulations to you. So to answer that question, I absolutely love franchising. It is in my blood. I grew up from a very young age at my uncle's pizzeria, working in his basement, making boxes, really from the age of 9 years old. And I've been working ever since then in the restaurant type of atmosphere. And as I was, getting older and made my way into college, all my business classes revolved around franchise concepts. I wrote a lot about franchise concepts in college. When I started here at the firm about 15 years ago as a second year staff person, our head of HR asked me if I was willing to travel and drive and sleep overnight. I said yes, and they put me on the firm's largest franchisor client at that time. I've been on that client ever since my first day there, and slowly made my way through the firm as I moved up the ranks. And about 7, 8 years ago, I went to my first franchise convention through the IFA, and I was hooked from there on, watching all the guest speakers and seeing all the brands, the concepts, and how everybody was very energetic and passionate about the industry. And kind of that just took me from there, and I've been full-fledged franchising ever since. I spend about 90% of my year in franchising, traveling around to different various trade shows, conventions, working with our clients, consulting, audit, tax work, all franchise related. And it's a great field, and I'm looking forward to seeing, once things really start to open up, how franchising is going to rebound.
Mm-hmm.
Awesome. I think one thing that you didn't touch on, and I think you're being super humble about, is that Citrin Cooperman was named 2019's top supplier in the CPA category by Entrepreneur Magazine. Tell us a little bit more about that, and how do you get nominated or even voted into that?
Sure. So Entrepreneur Magazine puts out a survey of, to different various franchisors across the country. People call in, vote. I'm not sure how the back end process works on there, but we were very, very honored to be nominated last year. Hopefully we'll be in the running again for 2020. So, if anything comes out on that, we'll absolutely share it. And really a lot of it goes into all the hard work and dedication that Citrin Cooperman has put into the franchise practice. My partner, Aaron Chaitovsky, who's my mentor and who started the practice years ago, who has really brought me along and opened a lot of doors for me and kind of showed me the ropes and told me, here it is, go take it. And that's kind of what we've been doing. And it is very humbling to get those accolades. I'm not one to brag or boast or anything like that. So, we put the information out there. And I think when people speak to us, they can see our passion and love for the industry. And I think that's what drives people to work with us.
I love that. If you go on to the Entrepreneur Magazine top supplier list, right, for 2019, you're going to see the big four on there, and then you're going to see Citrin Cooperman right after that.
Yeah.
Great thing about that is they're not a big four, but they provide that boutique service model on a national basis. That's incredible. And so, if you think about how you get voted onto there, it's by the voices, right, of the whole franchise community. So congratulations on that. And what a great award and recognition. Lauren and I have this big goal to join you right in 2021.
That's right. That's right.
We're coming for it. We're enjoying you.
So maybe we'll set some time on the side to learn how Citrin Cooperman way, right?
Absolutely.
How you got there.
I'm going to give a plug to, while we're talking on this topic, to the International Franchise Association. They're a major player, obviously, in the community. Today is Member Appreciation Day. So if you see all our posts, everybody's posting today on the benefits of being an IFA member, the education that goes into it. So I got to give a plug to them because they've been super helpful for us.
Absolutely. Yeah. So Lauren and I, we actually scheduled to be at the MUFC Multi-Unit Franchise Conference this past spring, but obviously with the current climate, we weren't able to go. But we'll probably be there in August, right, with you.
No. Push back.
Oh, did?
Push back. Yep.
Oh, well. So, with that said, I don't know if everyone knows what the IFA is, but they hold one of the largest expos and conferences around the world. So, I encourage you to go if you haven't been to in franchise conference before. That is one of the biggest shows that you can attend. But with that, let's go ahead and get into the questions. Are you ready?
Yeah, I'm ready. Let's do it.
Okay, solid. All right. So first question, Lauren, you want to take this?
Can you take it, please?
Yeah. There was so much discussion and debate around the revenue recognition rules for franchisors called 606. Can you provide an update as to where things stand now and what your in 2020 audit looks like?
Sure. So yeah, the franchisors who are on the call now certainly understand that 606 is an accounting pronouncement. They probably never wanted to understand ever what an accounting pronouncement is. And 606 woke everybody up to understanding accounting and what this is. So to give a little history, the way franchise fees were recognized prior to this ruling, which was effective 1/1/19 for privately held companies, is essentially speaking, you would collect the franchise fee when the unit opened or you as the franchisor completed all your obligations to the franchisee. That franchisor at that point in time would recognize the revenue into income for the franchise fee. So you would collect $50,000. It would sit on the balance sheet as a liability, and then when you complete your performance obligations and your or the unit opened prior to this ruling, you would pick up the revenue. So immediately you have $50,000 of income. The way 606 reads is it kind of put the 606 is revenue recognition as a whole for all industries. I just want to be clear on that, not just for franchisors. Franchisors, though, unfortunately got an unintended consequence, we believe, of this 606 ruling, where the short of it is you collect that $50,000 franchise fee, and the initial ruling is you can't, no matter what happens to that franchisee, that $50,000 will not be picked up as income when they open. You have to spread it out over the life of the agreement. So that could be 10 years or 15 years. So 50,000 divided by 10, that's your income pickup every year. Back and forth with the IFA and the FASB, our firm was able to get some concessions and some clarification on that, where you were, if you went into certain what's called performance obligations, there was an opportunity to pick up some of the $50,000 up front and amortize the remainder. What happened back in April between COVID and all the IFA lobbying is FASB came out, the accounting board, and said, we may defer 606. So meaning if you did not issue a financial statement for 12/31/19 during that time, you are allowed to go back to the old rules. There was a very technical clarification in there where you actually had to wait for the FASB to issue that ruling. That did not happen until June of 2020. So there are a lot of odd year-end franchisors. Let's say you have a May 31st, 2020 year-end. You're going to reap the benefits of this deferral where you can use the old rules. There's a lot of debate going on right now as to how this is going to play out for 2020, year-end 2020. Mm-hmm. There was a FASB board meeting on Wednesday discussing it. There'll be some notes coming out on that meeting on how this is all going to play out. Our firm is very, very plugged in with the FASB and the IFA. So we will be sending updates as necessary and when they come out. And I don't know how 2020 is going to look at this point. We got to see what these rule changes are. If they allow us to use the old rule for another year while the FASB goes through the research on how to address this for franchisors. So we'll see how it plays out. But I've never seen accounting be a hot topic among franchisors until this came out.
Welcome to COVID.
Yeah.
It's accounting and everything. You think about it as these business owners are trying to navigate their business and just keep their doors open. They're now being thrown all of these new regulations, whether it be about workers' comp or HR or taxes or legal things that even, as experts like yourself or our friend Jonathan Barber at franchise.law are just constantly having to keep up on top of things, just like TriNet is on the HR side. It becomes extremely cumbersome.
Yeah. So yeah, that's where that stands right now. We'll see how the next couple of months play out, and there will certainly be updates on this topic. And between Citrin Cooperman, the IFA, and others in the industry, updates will be coming out to the community.
That's awesome, and I'd encourage all of you to go onto the Citrin Cooperman website. Their trends and insights are always being updated, and they have actually a landing page for the franchise practice. So I'll put it in underneath on the scroll pretty soon, and also in the live chat. Hang tight real quick. So we're going to go up with the next question. What are some of the overlooked tax changes provided in the CARES Act?
Yeah, this is a good one. So this is more for probably the multi-unit franchisees that are on the phone or that are listening in, or anybody who has been doing build outs, let's say a swim school, gym, that sort of thing. So there was so much focus when the CARES Act came out on PPP funding, the EIDL loans, and everybody was focused on that. What was also included in the act were technical corrections for depreciation. So what that means is if you built a restaurant, a QSR, and you had a lot of your fixed asset additions posted to an account called leasehold improvements, those were not unfortunately subject to bonus depreciation. So meaning if you spent $200,000 on leasehold improvements, that $200,000 was not immediately deductible on the bonus depreciation. And that was really a technical error on the original tax law that came out about a year and a half ago. The CARES Act actually fixed that. And so what it allowed to do is it allowed you to change the method of depreciation for this category. And so if you have a profitable business, or if you were break even and you did a big build out, you can now take those expenses that were not deductible in the past and deduct them now. And so that was a method to immediately put cash into taxpayers' pockets, because if you paid taxes in because you didn't make a deduction for these improvements, and now you deduct them, you could file the return and take the losses, which would ultimately move up to the owners and probably get you a refund. So that was put in there specifically to help put cash in the taxpayers' pockets via a tax return, as opposed to funding or loans or things like that. Another one that plays into that is there was also a limitation on how net operating losses were carried back and carried forward. This really plays directly into depreciation. So they limited the amount of losses that can go back and forth. The CARES Act also opened that back up. So now combining depreciation and the change in the net operating loss rules, again, another way to put cash into the taxpayer's pocket. So very beneficial changes that came through that are not really well publicized, because everybody's focused on PPP financing.
Yeah, and there are ways of getting cash flow now, right? If it's done correctly.
Done correctly, and by filing either amended returns, or if you still have your tax returns open now for the businesses, because they're not really due if they're on extension, deal with it now and fix the returns now before you file them.
Yeah, my assumption is a lot of the business owners don't even know about it, would be, unless they have somebody like yourself educating them on it.
Yeah, and it came out initially when the acts were passed. Just the publications, the media, everything is just really focused on PPP,
The PPP.
forgiveness, and
Right.
SBA.
It was a mad rush to get those loans. So I think because there was only so much money available as well, everybody was just like, it was like a stampede to get those PPP dollars. And now there's some dollars probably left on the table that they can go after. And those businesses that didn't qualify or didn't receive it, this is another thing that they should be looking at.
100%. And these are not related to PPP. So it's not like you can only do one over the other, which there were some tax law changes there with the employee retention credits and PPP, where you only had an option. Here, this is open season. So if you got PPP financing, fine. Still take this benefit on your tax return for build outs.
Yeah, absolutely.
Wow, that's incredibly insightful. So I have a quick question. Michael, your firm offers a certain type of services, right? From an accounting, CPA. Can you kind of quickly highlight that so the audience knows exactly what your firm can handle and can't?
Sure. Yeah, so Citrin Cooperman, it's a full service accounting, audit, tax, and consulting firm. So for the franchisor side, it's a lot of audit work for the annual FDD filings to do the financial statements that go into that filing. A lot of tax planning, projections. On the multi-unit side, where there is usually not an audit requirement, unless a bank or somebody, third party, is requiring it, we get very into the type of stuff we're talking about now, which is looking at the classification of the assets, making those tax journal entries, and then preparing the tax returns at the end of the year to try to get the franchisees the most legal bang for their buck that follows all the tax changes that are going on. And then lots of projection work, state and local tax analysis. And then we also do a lot of due diligence, people buying and selling concepts, and we do all the reporting on that as well.
Wow. So you're pretty much, like you said, full service.
Full service. Full
Handle
service.
everything.
Yeah, full service between all our different divisions that franchising thankfully touches. There's specialists in each of those groups that we would bring in based on the need, at that point in time.
Awesome. Thanks for touching on that. All right, we're going to go ahead and move over to the next question. Let me see if I can add it here. All right.
I think it's at the bottom. Was it the?
Yeah.
So what are some organizational structure efficiencies for franchisors and the multi-unit franchisees that they should be paying attention to?
Sure. So this is one of my favorite topics to talk about, and I see the question flying through on the bottom now. So
yeah. Look, I don't know if everyone knows this, but I am doing production live. So
yeah.
All this that you're seeing is me. But
I think you're doing a good job. Imagine if I was doing it.
This is great.
Yeah. Yeah,
So
I didn't have this preloaded Citrin Cooperman tax audits. I just typed it up real quick and then added to the screen. So, yeah.
Nice.
Sorry, Michael. Go ahead.
You're good. So on the franchisor, so we look at this for both sides, which is how the question reads. So on the franchisor side, we look for different structures to put in place that are best practices, for franchisors. So, if you have a franchise company, if you have your own company-owned units, you obviously have intellectual property and trademarks. How are we going to set that up from an operational point of view? Do you want to combine them? Should we keep them separate? Should there be certain agreements in place? So we get very involved with helping out with that structure. And really the goal is asset protection at the end of the day.
Yep.
And let's put the assets in their own entities where they belong and, set the right structure in place. And the attorneys love us because they're the ones that do all the drafting. And we're just kind of giving the ideas of how this should work. On the franchisee side, franchisees move very fast, especially the ones that are, that have big development agreements that they have to follow. And so they're forming entities, every month, every 2 months. What happens a lot of times there is in their early stages, they're forming maybe, let's just say they form 5 entities. There are 2 ways to structure that. You can put all your companies in one entity, which I see that a lot, and I'm not saying that is correct or wrong. Mm-hmm. Or a lot of times people form 5 entities, one for each location. But if the ownership is, let's just say we're the 3 owners, if each of the 3 of us own those 5 entities, I've now created 5 tax return filings. However, if we put a different structure in place with a holding company and we make these single member LLCs, we could eliminate a lot of the tax filings and roll them all up into one and create a lot of operational efficiencies, reduce the amount of payrolls that are run, have everybody in a management company as opposed to each individual location, have a real estate company for all the leases. So these are things that we look at, and they're things for multi-unit franchisees to think about even now as they're looking for ways to streamline the reporting and eliminate paperwork.
Mm-hmm. Yeah, absolutely. I was just thinking about some of the different restaurant groups that I have and some of the franchises that I work with that are quick service restaurants. And I can only think of in my experience one master franchisee that had everybody under one entity, but he ended up breaking them up and doing exactly what you're speaking of as a way of managing the different locations.
Yeah. And I'm sure with your organization in TriNet, if they had 10 locations and you ran one payroll, that if you wanted to, you could break out the payroll by, division or something.
Exactly.
Each location. as opposed to running 10 payrolls.
Yeah, and then the ability as well is just to have kind of that one global system of record, whether it be from an accounting standpoint or HR or whatever it is operationally, to, if you are that business owner, be able to see what is going on in all of my entities with instead of having to pull each one open separately. I think that's really, really important to have a true idea of what your true cost of ownership is for, that total piece of business.
Right.
Mm-hmm.
Right.
Absolutely. Great points. Great points. I think it's valuable for anyone to, our audience to at least sit with you in order to do maybe like a review of their current organizational structure to see if there's any
Sure.
strategic planning that they can do in order to create these operational efficiencies that you're talking about.
Absolutely.
Yeah. All right. So we're going to hop on to the next question. You ready?
Let's do it.
All right. This one's not on the banner.
No, but I do see it.
Yep. So why is it important to have the appropriate corporate structure in place?
So yeah, this word is a buildup of the last question that
Yeah.
we really discussed. And really, at the end of the day, it is for asset protection is a big one. The other thing is, you can create multiple companies, multiple businesses, and if you have the right agreements in place between the entities, and maybe now you want to take your company and sell it, or you want to open it up to private equity,
Yep.
you've now created multiple assets, multiple things to sell, where, and when I say these types of things, it's not something just to set up and you put some paperwork away and you forget about it. Like these are real. We're looking to do this as real companies. So if I have 3 companies and I have management agreements in place between these companies, real fees need to be paid. Like we need to be moving money where it belongs. We need to be following real agreements based on what is actually taking place. And that's how you start to build equity, build up the value of each of these companies, that now when you're looking to package something together, maybe you only want to sell company number 1 as opposed to the whole thing. And so that's why I think it's very important to have the right structure in place. This way, when you're getting ready to go to market, you have a lot to present, and it shows buyers that you're serious about what you're doing, because most sophisticated PE groups are going to restructure the company to suit their needs. So if you're doing that up front, you've already added value to them by accomplishing the first step.
Yep. I always say if you want to be $100 million company, then, you want to sell for it, then you need to act like one right up front.
Act like it.
So I guess my question on that, and kind of just tying into the multi-franchisor and kind of that building, when you're working with, let's say, a franchisee who, maybe they just have a couple of locations, but those are being run separately and they need to have this conversation with you, or they're looking to grow more, maybe what is some advice that you have from your experience working with franchisees, that some of these franchisees who are looking to grow in what they're doing, is there any advice that you would give to them of things that they should be aware of right now, so going into the future they can set themselves up for success from a tax standpoint or in your own experience?
They should. So if they have development agreements in place, so this is not for maybe the person who has 1 or 2 locations. This is more for somebody who signed a development agreement to open 10, 15, whatever the number is. They should be looking at this sort of stuff now from the beginning, because the development agreement is probably in one company name, and now they're going to sign leases or whatever the concept is for locations 1 through 10. Now is the time that they should start thinking about the organizational structure, because you don't want to fix it when you have 10. You want to set it up now from when you have 1 or 2. This way, it's just easy. You get ready to sign franchise agreement number 3, franchise agreement number 4. The structure's in place. You're just adding on to it. So this is really for the multi-unit developers out there that are going to be doing 5, 10 plus locations. They should look at this stuff from inception, just to set it up. Because like I said, once it's set up, you're just adding to it. There's not much to do after it's set up.
Awesome. Thank you so much for that input. So it looks like we're at the 30-minute mark. I believe that we only have one more question left, and then 2 questions from the audience. Do you have some time?
Cool. Good timing.
Awesome.
Let's do it.
Yeah, it was great timing. All right, hang tight. So, last question from you. What are some tax considerations for international franchising?
Okay. So another popular topic right now. There's one or two big things to consider among many little things. But as people are either coming in to the U.S. to franchise or are looking to take their concept from the U.S. overseas, there's a lot of different things to think about, such as double taxation and treaties that
Yeah.
that the United States has in place with with other countries. And this goes back to also the corporate structure. Having the right international tax structure will alleviate some of the double taxation concerns that there are depending on what country you're going into. The other big issue is let's just say you're going into another country from the US. If you don't have the correct structure there, the franchisees, when they're paying their royalties to you, may have to do what's called withholding taxes. That's a pain for the franchisees because it's not a common tax like income tax and partnership tax returns. It's a special form that gets filled out. The franchisee becomes the agent, which means they're really responsible for this stuff, and it just puts an undue burden onto your franchisees. So by putting in the correct international tax structure, you could avoid the withholding tax issue, and you could avoid the double taxation as money is either coming in or going out of the United States.
Wow, that's great. And your firm can help out with that, right?
Yeah, so we have a very, very robust international tax department, and we're also part of the international firm Moore, which is a conglomerate of firms across the world that we work with that assist us in each of the countries.
Awesome, that's great. So I know Lauren has a hard stop pretty soon, and I want to be respectful of her time and yours as well.
Yep.
There are actually 4 questions out here from the audience, and man, I want to be able to choose one that kind of covers all. I think this might be more in your realm here. From Diane Yu, do you recommend for new restaurant growth they franchise or do private growth? And what's the strategy? What strategy is best for growth?
So that's the common franchise question. So it really depends what your end game is. If you're looking to build generational wealth, franchising is a great way to do it if it's done correctly. And you have to be willing to put the resources in place, the systems in place to service the franchisees the correct way. And it's a mindset thing, because if you want to own 5 of your own restaurants, absolutely nothing wrong with that, because maybe you're a very good operator. Once you become a franchisor, you're now in the business of selling licenses and making sure that third parties could become profitable. So it really depends on what route you're looking to go and how you want to capitalize the company. If you own 10 of your own locations, the employees are yours, the build outs are yours, you hold the leases. If you franchise 10 locations, you could probably have 0 employees and franchise 10 locations. So it really depends on what your end game is and what you're looking to accomplish.
Awesome, thank you. And Diane, from my experience, just working with some private equity firms, if that's your kind of end game right there, what they're looking for in order to buy a master franchisee agreement or even jump in with you to buy a development contract, you would have to have a proven concept of at least 9 units. Is what I'm seeing here in Southern California, is what the ask is from a private equity firm. So just a little insight there. So next question from Diane Yu again. If I were to start a franchise startup, how many franchises should I target for yearly growth?
9.
Well, that's to start off, right? But from an annual growth perspective, what percent can I charge for royalty for a new franchise startup, and when do I increase my royalty? So for me, from what I'm hearing on an average from a royalty perspective, that's about 5 to 6% is what I'm hearing here in the California market. And then as far as like target for annual growth, Michael, I'd like for you to take this if you don't mind.
Yeah, look, in the beginning, it's going to be a little slower as you need to identify what your key franchisee looks like, meaning that you're gonna want them to be good at these 5 things, whatever those 5 things are that are unique to your business. They absolutely must have these 5 things. The other 10 things you're gonna either do for them or recommend service providers that could do that for them. So in the beginning, it's going to be slow. I can't give a number. I mean, some people want to, if they do 10 a year, that's fantastic because they're massive build outs. If they're
Yeah.
service companies, maybe they're looking to do 20, 25 a year because the startup costs are low. So it really depends on the model and what you can accomplish and how quickly you can onboard people to service those franchisees.
Awesome. So 2 more questions here. One about Chick-fil-A and the other one about Dave's hot chicken. I think we'll take one. Which one do you want to take, Michael?
Chick-fil-A.
Chick-fil-A? Okay. How about you? All right, we'll just go
I
with
love Chick-fil-A.
it. All right. Again, Diane, thank you so much for participating here. Have you worked with Chick-fil-A, and what's your thoughts about being a franchise? I guess of Chick-fil-A.
I have not personally worked
Yeah,
with Chick-fil-A.
I have.
I would love
Okay.
to. It would be my pleasure.
Diane,
I do know there's a lot of articles written on Chick-fil-A and their system. There's a ton of information out there on them for sure.
Yep, absolutely. Do me a favor, Diane. You can connect with me on LinkedIn, and I'm happy to connect you with my network who has access to the Chick-fil-A franchise and could probably give you a little more insight there. And then, so real quick, last one. What are your thoughts on Dave's hot chicken strategy, aggressive national growth?
The last part cut out. What was the question?
I'll say it's what are your thoughts on Dave's hot chicken strategy for aggressive national growth? So they're growing. They're one of those franchise quick services that's just blowing up. So I think Diane's wanting to know your thoughts on that strategy of excessive growth versus just slower.
So I'm not personally familiar with that concept, but what I could add to that is when you see a lot of advertising on Facebook, LinkedIn, or wherever, where you see 25, 30 concepts sold, whatever the number is, the question that you got to ask yourself is how quickly do they get those open? So I'm all for massive explosive growth as long as you can convert the sales to openings. So, when you sell a big multi-unit pack, and I don't know if that's what they're doing or not, but if you sell a big multi-unit pack and you sold 40 to somebody and then you sold 40 to somebody else, the question is how quickly do those get open? And to me, that is what makes a successful franchisor, is how quick they can turn those units and actually get them open and operating.
Mm-hmm.
Thank you for that insight, Michael. All right, so we're just about there. I'd love to maybe have any closing thoughts, Michael, and how they can reach you. What are your
Sure.
some thoughts? Yeah.
Sure. Well, I mean, thank you again to TriNet and to both of you for allowing me to participate today. You can reach me through LinkedIn. I'm very active there, so please feel free to send me a connection request. You can email me. It's miannuzzi@citrincooperman.com. If you go to our firm's webpage, you can search for me. I show up there. And some closing thoughts. Look, I know this is a very trying time for everybody right now. And I think if we hang in there and everybody works together to turn this around and turn the tide, I'm hopeful that the economy, franchising as a whole, bounces back. We are seeing a lot of activity in franchising, people looking to start new franchises, which is making me very hopeful that no matter what happens out there, people are going to be looking to start franchise concepts as a way to grow and run their businesses. So that gives me a lot of hope for the future. And I'm looking forward to hopefully seeing people at a future convention. I love going to those, and I'm hoping to see people maybe in the new year someplace at a franchise convention. So.
I'd like to go to one. I'd really appreciate it.
So Michael,
here.
Yeah, right?
Laura and I are going to be joining the IFPG pretty soon here, and
Sure.
I hear that they do some type of like retreat for their members. Is that something that you participate in as well?
I have not been to that one yet, although I am very friendly with the IFPG guys. Great website. Don and Red and all those guys that are there. It's a fantastic
Red Oswell.
Yeah. But
Awesome.
Go there.
Yeah. I hear it's a fun time, but maybe if we have extra ticket, we'll invite you with us so we can all have some drinks.
That's right.
All right. Well, everyone, this concludes today's Franchise Coffee Chat. Thank you for tuning in. If you want to reach Michael, you can go on that link right there on the bottom. I've also put it in the live chat as well. If you want to email Lauren and I, feel free to do so as well. We're happy to communicate. As you can tell, we're very social. So thank you, everyone. Michael, thank you, Citrin Cooperman. This was fantastic. I appreciate it, everyone. Have a great weekend.
Thank you, guys. Thank you so much.
Thank you.
Take it easy. Enjoy the weekend.
You too.